Coming up today, one of the biggest weeks of the year for the stock market. The latest on the election, JP Morgan's generational opportunity, oil prices plunge after Israel's strike on Iran, and Jamie Dimon says it's time to fight back. It's a massive week, guys. Let's go. And welcome back, everybody, to the daily market review on what's potentially one of the biggest weeks of the year in the stock market. We've only got 3 days left in October. Are we going to see that rug pull before the election? Or is this going to continue to be one of the best Octobers ever in an election year and after a hot year-to-date performance? We're in the biggest week of Q3 earnings. Tomorrow we'll hear from Alphabet, Google, along with Visa, AMD, McDonald's, and we'll also get the JOLTS jobs report. Coming out of Wednesday's session, we'll hear from Microsoft, Meta, and Eli Lilly, along with GDP, numbers from the States expected to come in 3% annualized. We've also got the meeting on Wednesday of Bank of Japan deciding their interest rates. We'll be looking for language from them, along with GDP data from the Eurozone. And we'll still be busy come Thursday, as we'll get to hear earnings from Apple, how their latest iPhone 16 launch is going. We'll also get numbers from Amazon, along with personal core expenditures, PCE inflation, expected to come in 2.1% year over year. Then Friday will be the jobs report. US economy expected to have generated 123,000 new jobs in the month of September. Unemployment expected to come in 4.1%, which would be pretty amazing if it did, considering the hurricanes and strikes we've seen in the States of late. I would expect the data to be skewed, and if it were because of that, I don't think the market would get upset. We still got the expectation of a change of government. Rippling across global financial markets, Russell 2000 leading the indices today up 1.6%. Another strong move from regional banks, up 2.8%, close to yearly highs. Bitcoin also trading on firm footing, breaking out multi-month highs, approaching that all-time resistance zone, which is currently around $73,000 a coin. Helping to light up the whole sector, there's MicroStrategy, which you could also think of as like a leveraged Bitcoin ETF. Steam trading higher here this last month, along with some of the smaller names in the industry as well. Today, Bitdeer Technologies ripping up 24% today on volume, along with Bitfarms. Big signs of accumulation here, up 12% today. And the man's own stock, DJT, slapping on another 21% today on huge volume. 106 million shares today. Momentum thrust firing off here. Absolutely ripping this last month. Another interesting one today, Rumble, video sharing platform with a big focus on no censorship, freedom of speech. Actually, JD Vance, potentially the next VP of the States, is a shareholder in Rumble, up 14% today. Prison stocks continuing to rip. Geo Group, up 6.9% today, along with Core Civic as well, on expectations law and order could be restored in many American cities and the streets may get cleaned up. But we've got lots of stocks making moves today. Market's really lighting up here. My stock picks portfolio sitting at all-time highs, currently up almost 15% in time-weighted return since I started it in June. If the market continues to hold up, I think it should finish the year above 20%. And we've also got some of these prior high-flying stocks like PayPal continuing to tick up, break out today, just ahead of their earnings later on this week as well. And the AI trade, robotics, artificial intelligence, shaping up. There's BOTS ETF, just going out to a weekly chart. Looking pretty good there. Bit of an ascending triangle, maybe gearing up for a big breakout. And a big thanks to everyone who filled out my survey over the weekend that I put out last Wednesday. And for you guys following those top 10 stocks I said to keep an eye on, many of them ripped up today. SoundHound AI, up over 18%. Red Cat Holdings having a nice bounce, up 13%. OppFi up over 6.7%, and a really exciting stock but highly speculative, Serve Robotics, which is in the business of last mile food delivery, partnering with Uber Eats and the like, using little AI-powered robots driving around the streets delivering food, up 21% today. And even some of the old favorites coming back to life today. GameStop up over 10%. Market's getting really excited right in front of the election. We've still got nuclear on fire, NuScale Power continuing to run here, up 19%, along with Nano Nuclear Energy, NNE, another stock, big volume coming in of late. Sam Altman's Oklo, 28% today on 44 million shares traded. Nuclear trade is on fire, along with Lightbridge Corporation. Let's not forget about lithium either. I'm talking about a little bit lately. Piedmont Lithium, PLL, up 15% today, along with Lithium Americas continuing its run higher. Also, don't forget about quantum stocks. Quantum computing, getting a lot of investors' attention of late. There's IonQ, slapping on another 5% today. D-Wave Quantum, popping up, getting a lot of volume of late. As is Rigetti Computing, RGTI, up almost 23% today on volume. And another former high flyer, 3D printing stock Triple D, slapping on 13% today. But amongst all those hot stocks and industries of late, we've got crude oil falling today. And stick with me today in this video because I'll give you some insight later on the sophisticated attack Israel did on Iran. Pretty much left them a sitting duck. But what's really got the market excited is they didn't go after their oil refineries. There may be an opportunity for a ceasefire However, either way, Israel looks to have Iran covered pretty well, and that's kind of taken the fear out of the crude oil market. Crude dropping significantly today. At one point it was down almost 8%. Did seem to get a little bit of a buy the dip action in the support zone here, just going down to the 5-minute chart. Does appear to be some signs of accumulation here. And just looking at some of the biggest oil stocks out there, ExxonMobil looks to be bought the dip right off the open, along with Chevron, holding up pretty good. I'm also keeping an eye on Buffett's favorite, Oxy. Did a little bit of a buy the dip here. We've got a bit of a bullish divergence going on in the DSI. Valuation on these oil stocks still pretty good. And I've also got my eye on some fracking stocks, which are currently technically oversold, along with the price of crude. We are getting some signs they may be close to bottoming out here. My reversal signal's firing off. Just looking at Halliburton and other stocks involved in fracking. Liberty Energy, a few signs of accumulation of late, along with others, Patterson, UTI Energy. Trying to find support here, potential bullish divergence, along with another fracking stock, ProPetro, under the ticker PUMP, reporting earnings tomorrow. We get a change of government with a more pro stance on fracking, which has actually allowed the US to become the world's #1 producer of oil and compete with other low labor cost countries in the global market. Middle East is still important though, makes up about 1/3 of all global supply. However, I think the odds favor a tailwind for some of these fracking stocks, with the valuations on them not too bad at all. Again, not financial advice, please do your own research. I'm just sharing with you stocks that are catching my interest on my watch list and what I think could be next to move. But there's a look at the latest odds. Again, pretty much looking like a lock here. Really going to surprise markets. If things don't unfold the way they're currently being priced in, that's going to cause a huge gap down. However, what could also cause a lot of volatility is if we don't even get a winner on the night, like a normal democracy, especially in some of these big swing states, Pennsylvania, and some other swing states, where the current admin has sent a lot of illegals with a big push on not requiring voter ID as well. So unless we get a clean election, expect a lot of volatility, and especially if we get a blue win as well, markets will do some significant repricing pretty quickly, and it could feed onto itself, and before we know it, we've got a 10% correction in the S&P 500. If the result is what the market's currently pricing in, I think we'll get a little bit of a relief rally, maybe a big fat green candle come next Wednesday after the election night, if a winner is decided by midnight and the result is as markets are expecting. And we should see some good moves out of financials, industrials. Potential change in admin may look to lower tax rates on domestic producing companies, so look for small caps that produce in the States, like I already touched on, oil and gas, fracking, crypto-related stocks, and just the broader market as a whole, on expectations of less regulations, less taxation. Otherwise, if not, if we get a blue win, I'd expect to see a big bounce in clean energy, renewable energy, which has actually been beaten down this last month as well. That'll probably have a big gap up. However, as a long-term clean energy, renewable energy bull myself, even with a change of government, I'm still not ruling out this sector. Maybe actually a good contrarian play, as even though they may lose some regulatory tailwinds, credits of such, I think with Elon Musk firmly planted inside the government and such a big supporter of this new government, he may be able to hold sway and influence, and this sector may not be left for dead after all. So stay tuned to Click Capital. I think there's more to come on this, maybe offering up some opportunities here and the next few weeks. Also interesting to hear Robinhood is letting users bet on the election. Become a big business now. Courts just ruled Americans can bet on the election, billions and billions of dollars across all these sites. And once again, markets are pricing in something very different from the media polls, some showing the blue team still out in front. Also interesting to hear today from the founder and CEO of crypto exchange Coinbase, Brian Armstrong. So this seems to be like the first election where new media has fully flipped traditional media. Long-form podcasts, X social prediction markets deciding this election. And there's a CEO of X there. And it's true, if you look around on all these new media forms, they're getting way more views than traditional media, mainstream media. All those old school channels are in decline. They're cutting staff, they're losing investment, and it seems more and more people are catching on to what's really happening, the data and the facts, which thanks to platforms like X are allowed to be shared. So it's definitely playing a role in this election, in addition to financial markets. Bond market potentially pricing in US growth to keep holding up and accelerating. Remember, ever since COVID, when GDP went negative, we've pretty much grown since then. 2022 was a 1 handle, 23 to a 2 handle. Now we're back on a 3 handle GDP growth and tracking higher as well. That's when the Fed cut there, when the Citi Economic Surprise Index was already trending higher. Data is coming in better than expected. According to Jay Powell and his team of 500, they didn't quite see all that. That's why they had to cut 50 basis points. Or they're super confident in inflation going down and staying down to 2% since they made that big cut. Also interesting to see today, and potentially a bad omen. Just as Janet Yellen has been asked about her concerns over the US dollar's status as the world's reserve currency, The Treasury Department sign falls off like some sort of weird bad omen from above. Catches her by surprise as well, just as she's been asked about the US dollar's status as a world reserve currency. You know what they say, fate loves irony. Like I said, we're going to hear a lot about tariffs and how they're going to topple the global economy. Starting to get deja vu from 8 years ago, with economists now predicting it's going to be really bad news for the global economy. It's going to cause a contraction in GDP percentage. And I've bookmarked all these posts and data so we can come back to them over the ensuing years, see how their forecasts have held up. But like I said, markets are already pricing in what's to happen next. Just looking at a basket of stocks of export-sensitive European countries, such as car makers and luxury groups, definitely been trading weaker than the rest of Euro stocks. Also interesting to hear today from Wall Street's most influential man, JP Morgan CEO Jamie Dimon, says it's time to fight back on regulation, popping his head up and what I would say is a suggestion and kicking the ball off for potential new government to get things moving right from the get-go. He went on to say many banks are afraid to fight with their regulators because they would just come and punish you more. We are suing our regulators over and over and over because things are becoming unfair and unjust and they are hurting companies. A lot of these rules are hurting lower paid individuals. And this could be part of the reason why financials are trading really strong of late as well. The expectation that regulations are going to get significantly dialed back and there's going to be a huge tailwind from the government to do business. Got JP Morgan currently sitting at all-time highs, looking pretty good on the chart here, along with the financial sector as a whole. JP Morgan also said there's a generational opportunity for investors in a particular sector, saying that lower inflation and stronger economic growth create a favorable investing backdrop that lends itself to opportunities across asset classes. And so they're talking about real estate. They're saying appears to be the most positive for the longer term. Elevated rates and challenging debt markets have driven down commercial real estate values. We see a generational opportunity emerging for long-term real estate investors as a direct result of valuations significantly re-rating. And it's true, something we've been talking about on the channel here for the past couple of months. Real estate having broken out of its multi-year bear market, put in a nice stage 1. We appear to be well and truly in a stage 2 here advance, in tandem with the pullback in yields over the last couple of months, but even the rise in the last month hasn't knocked over REITs yet. And even though we've got major Wall Street investment banks expecting low returns annualized over the next 10 years for the S&P 500, which is pretty much comprised of US large cap growth, had a stellar decade. Looking at others like REITs, they expect to hold up a lot better. Vanguard expects the annualized return over the next 10 years for REITs 5.2% versus 1.1% for US large cap growth. They expect 6% for small caps, and the world, excluding the States, 7.9%. International equities, emerging equities, 6.7%. Funny enough, they expect bonds to perform at 5% annualized rate, which I would be very surprised if that were to happen, considering still got the 2-year just above 4%, not to mention a huge amount of currency inflation. You want to see a big bond bull market, we need to see rates go back down to 1% again, which is possible. I just don't think it's probable. For the here and now, we're in the thick of Q3 earning. Just getting some results coming in after the close as I speak. Pretty much green across the board. Waste management with a good beat. There's Ford coming out 2 cents ahead. Not too many big misses either. And there's a look at tomorrow. Alphabet, Google expected to make $1.84. Visa $2.58. We'll also be taking a look at AMD and McDonald's. Wednesday, Microsoft, Meta. Thursday, Apple, Amazon, and MasterCard. That unfortunate coincidence of E. coli outbreak in McDonald's is already affecting their business. Customer visits falling. Their foot traffic down nearly 10% on Friday from a year earlier. And in the 4 states with those reported E. coli cases, Colorado, Kansas, Utah, Wyoming, traffic declined more than 17% on Friday from last year. And there's a look at MCD as we go into earnings. This will be an interesting one, getting a lot of volume of late. Are investors going to overlook this short-term problem? We're going to get a gap up, or is management going to come out and tell us things are not looking so good for Q4 and we're going to gap down? Outside the problems at the Golden Arches, things are not looking too bad. Goldman Sachs social media economic sentiment index tracking up, now starting to get back to those levels we had prior to 2020, along with a potential stabilization of consumer sentiment as well. May have seen the lows back in mid-2022. Still well below pre-2020, but potentially moving in the right direction here. And so the market's been holding up remarkably well in what's supposed to be the seasonally weakest period of the year. October, election, hot year to date, global macro on loose ground. Markets shrugged that all off, pretty much just grinding and grinding. And so if we've been doing really well in the seasonally weakest period of the year, how are we going to do going into the seasonally strongest period of the year? First 10 days of November, one of the best 10-day periods of the year, not to mention the rest of the year going into Q1 as well. And in fact, looking back at data, when we've had a really good 6-month return from May to October, that typically bodes well for the following 6 months. And looking back in history, the market can get a little nervous and jittery going into elections. Like a lot of big news events, market has to discount that. And we saw this recently with Tesla. They unveiled their robo-taxi. Market got a bit unsure because we're right in front of earnings. But then when the event happens, like the election, the market can kind of relax because then they're dealing with a known variable. And we can often get a good rally after the election. And what's really going to help inflation and the stock market as a whole is if oil stays down, helping to get gas really cheap right in front of the holiday spending period. That's the 6 weeks leading up to Christmas. This is perfect timing. And goes to show there was a bit of geopolitical premium in the price of crude. However, can't say it's completely gone away forever because this war may not be over, even though things for now look to be okay. And so to give you some insight on how once again sophisticated the Israelis were in their targeted response on Iran, this is the first major attack on Iran we've seen in a long time. They flew over 100 planes in the middle of the night, over 2,000 kilometers. Needed refueling in the middle of the air. The first wave of planes took out all the Russian air defense systems. Then the next wave of planes went in and took out some ballistic missile production facilities, their ability to produce missiles, other military assets. Didn't go after their nuclear facilities or oil assets, just as we'd been thinking. That wouldn't be in their interest to do that. However, what it did show is their clear superiority over the Iranians. Took out all their defense systems, spent a couple of hours doing work in their skies over Tehran, where the leadership currently resides, and pretty much left them a sitting duck. If they want to go back in, they can pretty much take out anything they want, unlike the Iranians, which can hardly penetrate Israel's advanced Iron Dome system, pretty much the best in the world. So long story short, as expected, Israelis have got them well covered, and so maybe the market's relieved to see that. And the Russians should also be worried, seeing their air defense systems were easily taken out, and this was a very successful mission for the Israelis. However, Iran's already come out and said they vow to respond firmly. I'm not sure if they really are that stupid, or maybe they do have a death wish, because I think if they do, that's just given the Israelis permission to go bigger and bigger and completely flatten their military ability along with their leadership if they want to. Because we're getting reports that Iran is going to use all available tools to respond to Israel's attack. Guess it all depends how much the Russians want to help them further. But on top of that, we're also getting news the Israeli Security Cabinet has made the decision to launch another retaliatory action against Iran because of the recent drone attack on Israeli Prime Minister Benjamin Netanyahu's house. So like I said, this war may not be over, but like I just pointed out, the Iranians are pretty much a sitting duck. If they strike back on Israel for this, Israel can just keep dialing it up, and next we may see the nuclear facilities, more military assets, potentially their top dog leadership if the Iranians want to go big enough. What does that translate into for all us traders and investors? Well, like the price action we saw on crude oil today, maybe it's not a bad buy the dip, especially on those oil and gas fracking stocks, potential change of government, maybe offering up an opportunity here. Because gold didn't really pull back all that much, and I think there's a bit of geopolitical risk premium built into this. So if we saw gold come down 2-3%, a big move for gold, that might be the market saying, hey, we don't expect any more drama over there. However, we didn't see that. So even though things are dialed down for now, it may take a couple of weeks for the Iranians to respond. The election result is likely going to play into this as well. Potentially, new government said they would support Israelis' ability to defend themselves. And looking at the prior admin's track record, they got along well with Russia, China, North Korea. It was really Iran, as Trump previously used a drone to take out the Iranian military commander. So we could still see a potential conflict with Iran, even with a new government. However, if the Israelis and Americans wanted to, they could have it all wrapped up by lunchtime. Fighter pilots will be home for dinner because it's pretty much no match. The only issue is if the Russians want to step in a big way, and it doesn't look like the Chinese will, because Xi Jinping has no interest in playing in others' wars. He's only interested in his own territories, for which he considers Taiwan one of them. And so that will definitely come into play next as well. We're already hearing potentially the next president accusing Taiwan of stealing US chip industry, maybe setting the stage for a big negotiation, because America and European countries are still heavily reliant on Taiwan semi. Over half of all advanced AI chips are made in Taiwan. You can think back in the old days, oil was the big resource countries were fighting over. Here today and in the future, it's going to be semi-chips. Taiwan, a big pawn in this game. And that's really why the Americans can't allow China to go in and take Taiwan right now. There's just too much leverage over them. Obviously, Xi Jinping knows that. But I'd say if Xi Jinping could take Taiwan while securing Americans' chip supply, I know it's really controversial, but they may be able to work out something. But of course, that's a complex matter because most Taiwanese identify as an independent republic democracy. Also interesting to note, we've got a bit of divergence here going on in the 10-year yield in oil, with crude here in the light blue, 10-year yield in the dark blue. So typically both move up in times of good economic growth and both pull back when the market's expecting lower growth. So which one is going to converge here? Or are we going to see a bit of both? Going to see yields pull back with a bump in oil, or with expectations of continued economic growth, a new government, continued Middle East geopolitical tensions, maybe oil can bounce back. And just looking at Fed fund futures, market still pricing in 95% chance the Fed's going to cut 25 basis points 2 days after the election. I'll be really interested to hear Jay Powell's language and commentary after the election, whether we get a change of tune from him, or maybe that's too obvious and he leaves it for December, January. It's going to be really interesting to see the market's pricing of interest rates going forward after this. And there's a look at market breadth today. Financials, consumer discretionary holding up the best. A little bit mixed, obviously. Bit of a pullback here in energy. REITs and utilities. It's really financials, industrials, tech and utilities, along with consumer discretionary holding up the best here in the medium and long term. But option dealers are still demanding a premium. We're going to get that rug pull. Got 4 days left in this week, and we got Monday next week, election on Tuesday. So I would be a little surprised if the market can just hold up right into next Tuesday. There's no nerves, there's no surprising headlines. Stock market seems to be totally fine. With a rapid increase in bond yields, high yield bonds still holding up here, dollar still trading on firm footing, and of course we've got the big earnings from mega cap tech. Apple, Microsoft, Amazon, Alphabet, and Meta all set to report this week. So a huge week for the market. Still seems to be coiling up, wait and see mode. We're going to get that rug pull. It's going to be this week, if not Monday, right before the election, or Tuesday, the day of the election. Either way, interesting times. We've got a lot happening. Bank of Japan, GDP data, PCE, jobs report Friday. It's all happening here this week, folks. Stay tuned in to Click Capital, and I'll keep you updated every single day of this week, all the way throughout the election, and I'll let you know what's moving out there and what I've got my eye on. Thanks very much for tuning in, and I'll see you again this time tomorrow. Cheers.